Welcome back everybody to another in the epic series with Tej Gill, Chartered Accountant of NIJ Accountants. And what a phenomenal chap he is. He's not just a chartered accountant, his whole family is in the firm, but also he's a commercial property investor and has a residential portfolio as well. So he understands today's topic from many different fronts. Tej, welcome. Do you have a website before we get going, just so that everybody can look you up in the flesh?
Yes. Hello, Andrew. Thanks for having me on, and thanks for the very kind introduction. The website, the firm's name is Niger Accountants, and the website is nigeraccountants.co.uk. We'll drop it into the comments and the links below.
We will indeed. Well, today, thank you for joining us, everybody. We're here to talk about VAT and property development. One of those popular topics where nobody wants to pay VAT. Now, offering your builder to pay cash is not the answer. So I thought we would bring on Tej, an expert in this subject, being a developer, property investor of many, many years. I've known Tej and I work with Tej on an ongoing basis, and he's a really smart chap. So, Tej, yeah, you are a smart chap, Tej. Don't be bashful about this. So we're looking at property development, and I've heard all sorts of things bandied around that you can claim VAT back, you can't claim VAT back, it's got 5% rate, it's got this, that, the other. Come on, help me debunk these myths. Talk to me, property development. I've got a piece of land. I've bought it. I bought it in auction. The hammer went down and there was no VAT on the land. So I don't have to deal with VAT then, do I? Because I'm going to build some houses on it.
Well, you're broadly right there. As always, it comes down to the detail of what you are doing and what the intention is once you've done what you are doing. So with something like new build of residential property, you are actually involved in a zero-rated supply. So perhaps take a step back from that and explain the different supplies you have of VAT. So there's VAT at standard rate, the rate we all know and love, 20%, which is applied to most things in general. Then you have a reduced rate of 5%. You have a zero rate, which is 0%, and then you have an exempt supply, which has no VAT. Now, there's a subtlety between a zero rate and an exempt supply, which means that if you're doing something that is zero rated, you can still reclaim the VAT that you are incurring on your inputs. Whereas exempt is you don't even take VAT in consideration. If you end up having to spend VAT on what you're buying or the services you're buying, you have to bear that cost within the business. So that's the sort of, in a nutshell, between a zero rated and exempt supply. So
by inputs, do you mean purchases? Just for the audience,
so whether that's materials, services, professional services, builders, contractors, that's all your inputs, the stuff that goes into your business to put something out from your business. So coming back to your example of a piece of land, and you're going to be developing it to make residential properties. Generally, supply of residential properties is exempt. So that's why no residential landlord will ever charge VAT on regular letting of residential property, whether that's as HMO or as single lets, because you're basically giving someone somewhere to live. So it's a necessity. It's outside of the VAT regime. That said, though, building new houses, in order to incentivize building of new houses, the construction of a new house is actually zero rated, which means that it is actually a VATable supply. So you are putting something out that has VAT on it. It's a 0%, but that allows you to reclaim all those inputs. So the building costs, the surveyor's cost, the architect's cost, the specialist cost, all that stuff can be reclaimed.
Okay, so you've just made me think here. I know people who are doing build to sell, and I also know people who are doing build to rent. Therefore, if I'm doing a build to rent, based on what you're telling me, Tej, does that mean that's an exempt supply, so I can't reclaim the inputs, whereas a build to sell, I can reclaim the inputs?
Yeah, exactly. I was actually having a discussion with somebody this morning, and it's exactly that. Remember at the beginning I said it depends what you're doing and then what you're planning on doing after you finish what you're doing. So if your intention is to just hold and rent, which seems to be the more common approach that most developers are taking these days, particularly for maybe conversions more so than brand new builds. But if you're holding to rent and building to rent, then you're making an exempt supply, which means that you can't be recovering any VAT on your costs. On the other hand, if you're selling, and a sale is not necessarily just a freehold sale, it's just a grant of a lease that's longer than 21 years. So a long leasehold also counts as a sale. And so in that case, you are making, again, a zero rated supply from the point of view of a new build. And so you can reclaim all your VAT costs.
So would a little tip at this point be, because I'm not saying I like to avoid paying any taxes, but what you might be able to do is build the rental properties in one company and sell it to another company that you own, or create a long lease to another company that you own. Therefore, you can reclaim those inputs. Would that be a fair thing to say, or might I be crossing a line there?
I forget the name of the lord that said it quite a while ago, but nobody is required to organise their own affairs in a way that means they pay more tax than they need to. Everybody has a right to organise their affairs in a way that minimises the amount of tax they have to pay, as long as they're not breaking the rules. So, what you're talking about there, Andrew, is it's a quite a common approach that people take. But I suppose only common if people know to do it, and not everybody is always told to set themselves up in the right way. Often come across people being told, "Oh, just get started. We'll deal with it later when it comes to it," and you end up missing VAT that can be reclaimed, and you end up being set up in a way that is very difficult to unwind, given the nature of property. It's such a large sums, and things move at such a glacial pace that actually it's so hard to unwind bad decisions. So if you set up correctly to start with, you can certainly end up making it so that you end up with that long leasehold being granted and able to reclaim the VAT in a development company and hold the property for rent in a different company. And again, that comes down to them making sure that your accountant is lined up with your tax advisor, and they are actually correctly carrying items in the books in the right terminology. We're accountants, and also a chartered tax advisor, so I'm super boring. But it's definitely worth making sure that the left hand and the right hand are talking to make sure that they are accounting for things correctly to implement the advice that the other person is given. To make sure that there's the right outcomes. But once you get into that, you end up with property. There's always more than VAT to consider. So don't let that tail wag the dog. You need to also think about stamp duty implications, and you need to think about corporation tax as well when it's being sold or transferred into group, and make sure that everything is picked up in the round together and being dealt with.
So I'm thinking we might have a few viewer questions coming in at this point, and if you've not already, subscribe to this channel, because we will be answering those viewer questions in future videos with Tej. Now, I'd also like to say he makes out he's quite a boring person, but we often go for a meal. We have a good Indian, don't we? And we have a good chat on many, many different topics, and Tej is certainly not boring. I would urge you to reach out to Tej. He really does know what he's talking about on this topic. So, moving us on, Tej. Another popular thing I get asked is, I'm doing an extension on a property. can I claim the VAT back on my extension on my rental property? Or is that a no? Is that an exempt supply? Or if I was buying it to flip, would it be a different matter?
Unfortunately, where it comes to an existing residential building that's going to carry on being used as the same existing residential building, then there's no recoverability on the VAT, on the costs. I suppose in that case, the only advice would be to find a contractor that's not VAT registered, that's small enough that they're under the threshold to not have to. But then you then got the issue about, well, you know, are they reliable? Are they? Is your project going to push them over? It's only 85,000 or so for the VAT threshold.
Yeah.
So is your project going to push them over that because, you know, is your project quite large? So you can step aside from paying VAT by getting a non-VAT registered contractor, but then you have commercial considerations as well.
Yeah. So if I was to convert that house into 2 or more flats, would that be VAT zero rated? Because I'm creating 2 dwellings from a shell of a building.
Yeah. This is where we get into the nitty gritty, and it really depends on the use of the building, if any extra floor space is being created to create those new dwellings as well. We had an example of a pub. A client had a pub. They were changing the upstairs and the downstairs into residential, but the upstairs was already residential in use. So in that case, the VAT had to be split, and we weren't able to do anything on the upstairs because it was already existing there. And the downstairs, the VAT could be reclaimed. But we also have the further consideration of, well, if somebody's moving something from residential into other use, still residential, but something like an HMO, in which case that is actually done at a reduced rate of VAT at 5%. So you should be paying only a 5% rate to your contractor on those jobs.
Okay, so a HMO will class for a 5% reduced rate. A conversion of a pub where it's got residential upstairs and commercial downstairs would in effect have only partial reclaim on the works to the downstairs. So you and I are involved in a project together in Leicester, which was a bank with offices above, and we're converting that to 4 shops and residential above. So would we be able to reclaim all of the VAT on the residential above and the commercial space below?
That particular building is 100% commercial use at the moment. So conversion from, or taking something from commercial to residential is counted as creating a new dwelling. And so in that case, we would be making a VATable supply, provided that it's being long leases granted afterwards. In which case, and I know that's what we are doing. And in that case, then you'll be paying a 5% rate on the work to the contractor. So, but where you can often run into issues here is if the contractor is unfamiliar with this type of work, they obviously are still buying materials at 20%, but they're only charging you 5%. So they have a cash flow issue there. And unless they've done this before and they know that's going to happen, it can often come as a bit of a surprise to builders. And they can end up, either demanding advance payments or even if it's really quite bad and it's quite a large project and there's a large hole or something, if you're not timely in making your payments to them. I've seen where they've ended up saying this, I'm going to end up getting myself in a hole, I've got to walk away from this. So make sure that the contractor who, when you're getting your tenders in, know about that cash flow situation, and they factor that in as part of what they're pricing out.
Well, it's an important consideration to get it right, especially at this time in the economic cycle that we are sitting in, because there will be a lot of builders go bust. I'm already aware of quite a number of people who've had builders go bust on them partway through their project, and getting another builder to take over a project partway through is not easy. And it also causes potential issues with building warranties and the like that you need to consider as part of your development. So really worthwhile tip is check out your builder, check they understand what you're doing, and check their solvency. Look at their accounts. Very important to look at their accounts and cash flows. So
I said earlier, don't let the VAT tail wag the dog, and that's especially, you know, getting the job done and everything is more important than sometimes the VAT plan. I probably shouldn't say that, but sometimes that's the case. It's more to make sure the thing gets done. Sorry, one other thing though on that, the conversion is, although in principle it's 5%, it really comes down there's always nuances on everything, right? So you could, unless the contract is the build contract is set up in a certain way, you could end up potentially having to pay 20% on some items that go in, depending, you know, white goods, things like that. If you were to do a full design and build contract from day one, and one person responsible for everything all the way through, then that should normally get the full 5% on everything. But just beware that as a rule of thumb, yes, 5% on conversions from commercial to residential, but always subtleties in there.
Yeah. Well, there's one area we haven't talked about, and it's a popular area that I know a lot of people are really into, and 2021 has been a massive year for serviced accommodation here in the UK, and I think it's likely to be big for a long time. Can you reclaim VAT on serviced accommodation, because it gets treated as commercial premises for business rates, it gets embedded capital allowances, all of which, if you want to know more, put a comment in the box below and we'll cover those in future videos with Tej. But let's have a look at the VAT. How does that sit with serviced accommodation?
So serviced accommodation is an interesting one, because as you mentioned, capital allowances, and we've talked before about the structuring. There actually comes a question of at what point should you transfer the properties, make that transfer in order to maximize your capital allowances claim, because the one that's doing the development is not going to be able to claim capital allowances. The one with the serviced accommodation business is going to, it's a business. And so there's a line that needs to be found of where's the right time to move the property over and put your alarm systems, your fire system, your cabling, your furniture, all that stuff in one and not in the other company, in order to get that 130% super deduction. So that's one thing to bear in mind. The actual question about VAT, you can recover VAT in a serviced accommodation business, but again, coming back to the commerciality, if you VAT register your serviced accommodation business, you have to charge VAT on your on the prices that you're charging people, which could suddenly make your accommodation less attractive if people are going to pay 20% more. So you just got to bear that in mind. Now, if you're going to end up having a serviced accommodation business that's over the threshold anyway, and you have to VAT register, then fine. But if you're sort of, a smaller operator, staying under the £85,000, then you don't want to VAT register unnecessarily. So that's what I mean by there's a line to find where the line is, that you've claimed VAT back in the development side, but that you actually get capital allowances on the finishings or the other side. So that's something you're going to need to pick up with a relevant person to be able to find where that line is with you and help you make the right decision.
So I think what we're basically saying here is VAT on the whole is recoverable on most types of property development that you have, but what you need to do is, before you purchase the property, before you spend any money, speak to a good chartered tax accountant such as Tej and his firm, because Tej and his firm are specialists in this. They don't just talk about it as a general accountant, they're actually doing it themselves. Tej and I are doing a project together, so I know Tej knows what he's talking about, and that's why we've brought Tej to share some of that expertise with you in an easy to understand and digest way. If you want to reach out to Tej, his website's here. His contact details are in the contacts, the bio below. So please do reach out to him. Now, Tej, is there any pearls of wisdom or top tips that you'd like to share on VAT that we've not already covered?
I think what you've said there about talk to the accountant or talk to an advisor first is the most important tip, and just make sure that they actually either they answer it or that they are honest enough to say, I need to look that up. And there's, like I said, there's subtleties on everything. For example, HMOs or renovating a building that's been derelict, there is recoverability there. So there's subtleties in everything, and so it's always worth asking the question. So that's the main tip, is to make sure there's a conversation going on between you and the person that you're relying on to help save you some cash flow or get some VAT back. But in general, yes, VAT is generally recoverable on development, and that's because the government want homes to be built. They want people like us and bigger players and smaller players to build homes, because there is a shortage. There is a shortage of it, and so if they can incentivize by making cash flow better or reducing the cost of build works, then that's what they're going to try to do, because they need to get those homes up and people in them. So yeah, that's the case. And as you said, we've got a project going on. At the moment we've got two that are built. We've got the planning in, and we're at build stage for them. We've got a few that have already been done, and they're just rented out now. So I've kind of felt that pain, and I often end up telling clients that will listen, at least anyway, to basically do the same thing that I've done. Sometimes getting to listen is the hardest part.
Yeah, I think saying these are the pains I experienced when I was doing it myself, my recommendation based on this is a very, very powerful way of getting your message across. You're not doing it from sitting behind a large desk with a large fee clock running. You're telling them, I'm in the trenches with you, I know where you're coming from, and this is how I solve the problems. And I think that is so important when looking for your accountant, that they know what they're doing and that they've been in the trenches or are in the trenches with you, which is why Tej and I work together and why we do this video series to help you. So Tej, thank you so much for joining us today. It's been a phenomenal introduction to property development and VAT. We haven't discussed complex things like form numbers, 1614As, Ds, Js, and so forth. I can see you. I can see you're about to head off for a cold shower now.
Yeah, that's it. Yeah, the form numbers are always. Yeah, that's when eyes start closing and they start falling asleep when you start telling them form numbers. Absolutely. But should you need to know about that, reach out to Tej. He understands development, conversions. That's both commercial conversions and residential conversions, HMOs, serviced accommodation. Really great guy, very approachable, and a fantastic practice. It's a family business as well, isn't it? Your father-in-law and your wife are also in the practice. Yeah, it's a true family business. It was set up by my father-in-law, and then my wife joined, and then I came trundling along as well a little while after that. And so we do all of this stuff. We've done incorporations before, and sort of structuring, inserting holding companies, EIS schemes, all that sort of fun stuff as well. We like to help people out, make sure they're doing the right thing, and develop relationships.
Perfect. Well, Tej, until our next video next week, stay tuned. If you've not already, smash that like button. Give Tej some thumbs up to say you've enjoyed his content and it was of value to your business. Drop a comment below what you'd like Tej to talk about next week. And furthermore, if you've not already done so, hit that share button and share it with your mates, because they will get a lot of value from following Tej. And if you're not already, I know most people who watch these videos are subscribers, but if you haven't done already, hit the subscribe and the bell icon, and you'll be the first to hear the top tips that come out each and every week from Tej. It's goodbye from me, Andrew Roberts.
And goodbye from me, Tej Gill.
Thank you, Tej, once again. See you shortly.
Take care. Have a good day.